It does seem like there are growing headwinds for Asian stocks, Southeast Asian stocks, U.S. recession, a slowdown in manufacturing, and so on and so forth.
I totally agree with you. That's what we believe second quarter or even the second half of this year will pan out. With the bank's funding costs rising, supervisory oversight likely to turn more restrictive, which means further tightening in the US and European lending standards is on the card. Meanwhile, the recovery in China and Europe from second half last year shock should continue, which means other Asian economies stand to benefit from rising China on relative terms. But the key concern will be after 3 quarters of above potential growth, we look for US GDP gains to moderate in the second quarter by 1%. And remember, JPMorgan's baseline forecast for US growth is that the drags are going to build in the second half and economy is going to push towards a recession by the year end.
Is China enough for you to be bullish emerging markets, Asia, or emerging markets in Southeast Asia? The likes of what? Fidelity, Aberdeen say that, you know what, we're pretty bullish.
Definitely, China can offset the slowdown which is happening from the US side or the global side, because China in GDP terms or even in terms of reopening, what we are seeing can offset some amount of kind of a slowdown coming from the global. But whether it will be fully, that's a big question mark, because 86 to 88% of the time, the Asian equity index or the emerging market equity index moves in tandem with the US equity. So if we have a risk-off scenario in the US, it's difficult to see whether in Asia we are going to have a risk on. So that keeps us cautious on the equities in our part of the world.
Well, absolutely. There's an element of that, and you're saying essentially is that China cannot really perhaps replace the US in some senses. But what other headwinds are there? Because it does seem as though central banks in this part of the world are perhaps done in many places now raising rates, and that should surely be risk positive.
I disagree with that, because there are still risks which we are facing in our part of the world. So although we may not see the GDP recession in ASEAN, and we don't forecast also from JPMorgan side, but we think there's a strong probability of risk of profit recession. Historically, during the past US recession or below potential growth, the ASEAN earning growth have turned negative. And this time when we look at consensus forecast, earning growth are still sitting in a high positive territory. The second risk I will highlight is the risk of domestic demand slowing, which is not yet showing in the data. Now, risk markets seems to be pricing a scenario that is much more benign, where growth falls enough to turn our central banks more supportive, but not that much enough that will damage our corporate earnings or their repayment capacity. So markets are living, you can say, in a la-la land. The third risk I will highlight is more an outlier variable risk, which consists of failure of customers or key suppliers, over-hedging in the volatile markets, and even mark-to-markets of investment.